Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of historical previous resistance, which is now turned support. In fact, from here, all these previous rejections to the downside were created. Now we had the break back above the zone, so all this previous resistance is now turned support here. And as the market is testing this previous monthly resistance turned support, we could expect some bullish price action to be created away from this level. So from a monthly standpoint, everything seems quite bullish. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, what we can notice is that we have a market which clearly has been creating higher lows. From here, we had the first low, then we had a higher low here, another one here, and now we definitely have the possibility from this level to create a new higher low and to see some bullish price action getting created away from this level. We can also notice that from a pattern standpoint, we have a very clear impulse followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly inside of this area, which the market is in fact currently testing. And if we extend this level to the left, we can see that this is exactly the area from which all this previous rejection to the downside was created. So this actually is a confluence of support zone because we have both the previous resistance and the 50% and 0.618 Fibonacci retracements all lining up in the same area of price, creating a confluence of support, which we could in fact expect this market to potentially reject to the upside. So also from a weekly standpoint, everything seems quite bullish. Dropping down on the daily time frame, what do we have? Well, from a daily standpoint, it is quite clear how the market at the moment is inside of a horizontal accumulation area. In fact, we can see how we're currently getting horizontal price action inside of this zone. And if we remember and keep in mind that this is actually a confluence of support from a weekly standpoint, as we have just identified, this means that we have good probabilities that this horizontal accumulation area is actually an accumulation of longs from an institutional perspective on gold, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. Now, if we go and see what is going on when it comes to the commitment of traders, so the COT data, so essentially what the non-commercials are doing in the market, so big hedge funds and institutions that are in the market for speculation, and we go and see what they're doing, we can see that with the last reports, net positions have been increasing. We went, in fact, from having 71.4k net positions all the way up to having 207.6k net positions. So we had a clear increase of the net positioning, and with the last reports, we can see how longs got increased from an institutional perspective from 220.3k all the way up to 290.7k, and shorts got decreased from an institutional perspective with the last reports from 148.8k all the way down to 83k. So clearly institutions have been moving to the bullish side for gold. And remembering that at the moment we are inside of a horizontal area of a institutional accumulation, there is good probabilities of having more longing from an institutional perspective, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So what I would expect in a situation like this? Well, first of all, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect in a situation like this is that if this market will shift from an intraday bearish market to an intraday bullish market, at that point, I would expect a potential rejection to the upside away from this confluence of support area, for the market to reject that confluence of support that we have previously identified on the weekly time frame. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to get access to the most complete, all-inclusive mentorship program that you could think of. In fact, you have all my courses, so risk management and trading psychology course, the day trading course, swing trading course, the MQL4 programming course on automated trading. And you also have the possibility to gain access to all my softwares, so the COT data software, the trading station software. And if you continue to scroll down on the website, what you will see is that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.